when we talk about from a media perspective, the top 2 stories on the CNBC website this morning, guys, by the way, were both crypto involved. The first one was about the Ethereum flash crash that went to 10 cents, and some guys got hammered because they were either margin called or stop lossed out, and the exchange is going to make up for it somehow. The second most popular story was that IBM European banks partnering on blockchain technology story.
I have lots of stories. I told a bunch of my college friends at a Christmas dinner that they should buy Aetherium, and it was about $8. And one guy called his broker and said, buy me $100,000 of Aetherium, and the broker didn't buy it because he didn't know how to buy it. He called back, I never did it, and then now, of course, it went up, and the guy's screaming at him. And
firing his broker.
You know, access to this stuff is more difficult than most people buying a stock. That's getting changed pretty quick.
Sure, because of fintech.
And
yeah.
you know, I think I think there's going to be funds set up to arbitrage these price discrepancies, and those will go away pretty quick. But there's a big risk that, you know, when it was a small little market cap, the regulators don't pay that much attention. When you're now talking hundreds of billions of dollars, the moment consumers start losing lots of money because they foolishly go in and buy the hype and lose, that's when the regulators come out and say, wait a minute here. And so, you know, when I talk to the blockchain community, I'm always pushing them. I'm like, dudes, A, pay your taxes, because nobody in that space pays taxes. It's a bunch of libertarian, anti-government. And
it's a way to circumvent the government. That's the whole point, right? I mean,
and listen, the IRS is going to come after people. You know, people are making real money now, and so like the IRS isn't stupid. We pay our taxes, but it's also developed sound ethical business principles, or you know, Mr. Regulator is going to come with his hammer, and that's, I think, one of the bigger risks here, because there's a lot of fly-by-night. The killer app of all blockchain space is identity, where you get your own identity back. Right now, I sign up with Facebook and I give away my preferences in clicks, and I sign up with my healthcare and I give away my preferences in clicks, and that could all come back, right? The blockchain can determine you are who you are.
You've taken back ownership of your own identity.
And that, I think, could be very disruptive to the big companies like, you know, Facebook and Google.
Yeah.
Surprising. I'm guessing the next move is you're going to see, and this is just speculation, but the Googles and the Facebooks start buying big chunks of the space up. We're not in a bubble yet because Fidelity hasn't bought into this yet. My hedge fund friends haven't bought into this yet.
Cabbies aren't talking
Google
about Bitcoin.
Yeah, but it's getting there. You know, it's kind of first level frenzy. It'll go down, and then there'll be a second level frenzy. The other thing that I think is very important is there's real money pouring into these companies all of a sudden. You know, $500 million raised in the last 6 weeks. That goes into building out infrastructure, building out companies. Some of these companies are going to suck, just like Pets.com sucked, and some are going to be the next Googles. And so I do think this is a real revolution. You're still early.